Hello, good morning, everyone, and welcome back. I am glad to be here. Man, I was gone for so long. Had a great vacation, but we're back here on the Piper Academy. This is the Morning Market Report, and I am Army Piper. Shout out to all the alumni in the house. Glad you guys held it down while I was away. OC Guy was running the show, so mad shout out to OC Guy. Matter of fact, let's go ahead and let's bring him up. We got a lot to break down, guys. Some mixed market right now on the daily. Hourly is seeing some pretty hefty pullback, and we did get a little rejection right there. That orange line, that is a 200-day simple moving average. We broke it. We have now done the OC retest for further rejection to the downside. We're going to talk about the levels to watch today. We're going to be taking a look at some economic data coming out this week, and we're just going to break it all down the way we do, because you guys know this is how we do it. Let's get it. Class is in session. Good morning, everyone, and welcome to the Morning Market Report. Let's go ahead and bring up OC Guy here. OC, thank you for holding down the show while I was off in the Gulf of America. We appreciate you, man. How have you been?
Oh man, what is that? I can't find it in my maps, man.
Yeah, you have to use your US IP address, and that will help you out so that you can get the Gulf of America on your Google Maps. So there you go.
I see. Fun fact: do you know that this is not the first time that it had happened? In fact, the river that separates US from Mexico, it does have two names, right? One name in this side and another name on that side. So
the Rio Grande.
The first time. Yeah. And
what's the
what?
What is the name of it on the other side?
El Rio Hondo, like the deep river.
Okay. The dip, huh? Like crypto.
Yeah.
I live by quarter one crypto river here in El Paso, Texas. There we go. I love it. Dude, I got to jump over and just show this thing. This is pretty funny. I was looking at X earlier and I saw this. I was like, this pretty much sums it all up for Monday morning markets. Here we go.
There's no point in saying good morning because it certainly is not one.
There you go. Nancy Pelosi has said it. She put it out there to the people. Shout out to the Alex O Crypto Otter gang. They are pushing in here right now. So shout out to all you guys. We're just going to jump right in, knock out this news stuff. We got some macroeconomic data that came out literally 4 minutes ago. And then I want to get into the Bitcoin chart, take a look at some alts today, OC. So let's go jump over to the news and we'll be right back with the OC Guy, and we'll see what the charts are telling us today. Yeah, let's do that. Welcome. Good morning to everyone in the chat. I appreciate y'all being here. The alumni, I missed you all. We got Jake Falcon in here. Who else we got? Brian D, Jesse Gellick, Uncle Jesse's in here with his harp. Alexandra G, Crypto Billy, Givers Game. What's up there, man? How you doing today, bro? Who else we got in here? Jesse, my brother. Yes, he is. Absolutely. JRMO, Eileen Ulick, featuring Wick 589. Love seeing all of you guys in here. Big shout out to everybody that's in our chat right now. Appreciate you all. Let's go take a look here and see what we're seeing here on some it's not all economic news. Some of it I want to focus right here. Shout out to Alex O Crypto for breaking 10K subs, because family first. We're going to talk about the family here. Some good stuff before I get into the bad stuff. Alex O Crypto breaking 10,000 subs. So shout out to you there. What else was there? Crux, we're going to talk about this in a little while. Crux of Crypto with a very wise post there. And then, yeah, guys, we talked about this a while ago. The Kabisi letter posted this. He says, while everyone is focused on trade war, do not discount the impact of reduced government spending expectations. Government spending and job growth have been fueling the economy. Doge's cuts will be felt. This is what I have been banging the drum on for months. This is why I sold all of my Bitcoin at 102.7, because I knew that quarter one was going to be a nasty turn of events. And then Doge just added on top of it. There's going to be a lot of government jobs. That's what's been keeping the labor market afloat. And they're going to be a lot less of them. So not much different than what President Clinton did back in his presidency, when he fired 377,000 federal workers in order to balance the budget. Seeing it again right now. So we know how that ends up turning out. Long run turns out great. We balanced the deficit back then, and it also got everything under control. But right now, we are going to feel the pain from it first. So let's go over to the dashboard, take a look at what Into the Cryptoverse is telling us today. Looking like right now the total market cap is sitting at $2.68 trillion. The trend for the normal median of that market cap, guys, is $3.559 trillion. We are currently undervalued by 24.62% in the crypto space right now. Looking at Bitcoin's risk right now, it is at a risk band of 47.8% below that 50% line. And, you can see the colors here. We do a whole DCA Piper plan based on this with an exit plan of when to take profits in our Discord. So if you're even a YouTube member right here on the screen, you have access to the Bitcoin DCA, and that came out this morning. So we gave a nice push there for DCA this morning to our members. Bitcoin and the altcoin world both got, they got both of those. So looking at the stables right now for dominance, Bitcoin dominance with stables at 60.44%, without stables at 66.08%, I should say. And then let's go check out what the fear and greed is saying today. Let's go here. Let's go here. Fear and greed. Let's go there and then slide it over. Slide to the right. Guys, I had so much fun on the cruise. Cruise was fantastic. We are currently sitting at fear and greed 27. We are in fear right now in the marketplace. So let's go check out the crypto liquidations here. In the last 24 hours, 219,455 traders got liquidated. Total liquidations coming in at $622.1 million. The largest single liquidation order happened on Binance. It was Bitcoin, valued at $32 million in one single liquidation there. It was not me. I am not trying to get liquidated like. Excuse me, had to sneeze there. Getting back to my dry air here in the desert, guys. Looking at the crypto bubbles right now, you can see, like I said, on the daily, a lot of red here. Looking at the hourly, even more red. Let's go down and check out the prices. Bitcoin currently sitting at $80,695, a whopping $22,000 lower than what it was when I sold it. So, hey, there you go. Looking at the daily, down 3%, hourly's down 2.7. Ethereum is at $2,000. Guys, I still think Ethereum's going to hit $1,200 if we continue on this downside slide. Will we get a bounce and see something similar to what we saw in 2021, where we had that nice, pullback 55%, and then it did a second top back later in the year? That's possible, but hey, right now, guys, I think you're going to see some more downside coming on Ethereum. Looking at like 1,200 likely on Ethereum. We'll talk about that too. That's OC's favorite coin is Ethereum. So there you go. XRP down 2.4%, sitting at $2.12. BNB down 2.6%. Solana taking a massive hit on the daily, down 6.9%. Guys, it's down 21 for the week, 36 for the month, and it's down 14.7 for the year. It's erased all of its gains for the past 12 months. Cardano is down 6.6%, 25.3% on the weekly, still holding slightly up on the monthly there, guys, down to 70 cents. Dogecoin at 16.9, down 6.3%. Tron is down 3.1. Pi Network getting absolutely slaughtered, guys. This thing came out. Everyone was talking about it. Now there's a whole KYC thing going on it where they want everyone to KYC, and there's a lot of shady stuff going on with Pi Network, guys. If you're doing Pi, be careful, especially that KYC thing. Like I said, that's why I didn't want it on my phone originally. It is a device that is on my phone where I go and check out exchanges and this and that, and did not want that to have access. So if you're in Pi, be careful. New KYC requirements and a whole bunch of data sharing, mainnet stuff. It's a mess. Leo token, guys, that is a decentralized native token for the Leo network, and it is down 0.3%, sitting at $9.72, moving up one spot to number 12. Chainlink dropping to number 13, far off from $600. It's at $13.56, down 6.3%. HBAR down 4.7 at 20 cents. Stellar Lumens is down. of oh, look, Shiba Inu moved up 3 spots to number 17. It is up 0.5% on the daily. One of our only green coins is a meme coin. Go figure. Sui has lost its position down to number 18 now, down 1 spot. It is down 4.5% at $2.27. And then rounding out the top 2, Bitcoin Cash and Litecoin down 2.6% and down 4.5% respectively. That is where we're sitting on the top 20 today. Let's go take a look here at the U.S. market. Let's click that, go in. Let's see. Dow Jones right now, guys, down 0.82%. It is selling off across the stock market world. S&P is down 1.72%, and the NASDAQ down a whopping 2.75%. That is pretty hefty there for the NASDAQ to be down that much. Russell 2K, small caps, down 1.19%, and the VIX in the green. I still think this thing's going to hit close to 81 by the time this is all over. It's at 26.62 now. You do not want to still be in the markets by the time this thing hits 81% if it continues on that glide path, unless you're just dollar cost averaging. And then, hey, what the hey, it doesn't matter. That is what we're here for anyways. At the end of the day is, long term, right? This is a long game, as Piano Matty B always says. Let's go look at the economic calendar and give this a refresh, because this is where we got some data today forecasted. Did this come in? Is this off a little bit? This might be 9 o'clock, guys. Yeah, because we are now, let's see here. That is going to be there. Nope, it's going to be down 1 because we had the time change and it doesn't change over there. There we go. 9 o'clock it's going to be. So yeah, right now, consumer inflation expectations previously was at 3%. Forecasted that it's going to be up to 3.2%. And that is not going to be healthy at all for the markets. For inflation is continuing to rise. It means that the Fed Reserve cannot cut rates. So, caught between a rock and a hard place over there at the Fed Reserve with their rate cuts. Matter of fact, I do have the CME on here. Let's take a look at what this is saying. Oh, you know what? I can make this dark now. Allow for one day. Look at this. Is it going to work? Is it going to work? Auto. It's not going to work. Oh, see, it doesn't work on here, bro. Anyway, guys, March 19th is going to be our next FOMC date, and they are looking right now 97% chance of no change. That is being seen, especially as we see inflation fears. Tomorrow, guys, we're going to get JOLTS job openings. Right now, flip a coin. It's at 7.6 million for the number of job openings in America for January. Could be as high as 7.75. That would be an increase. Could be as low as 7.5. That would be a decrease. We'll see what that actually comes in at tomorrow. And then job quits. Looks like a lot of forecast there for a lot of people quitting their jobs. I don't know that I'd be quitting a job right now until I knew what was happening with the labor market. Wednesday, we're going to get core inflation data. This is going to be inflation week. Right now, it looks like core inflation rate month over month will be down 0.1% according to forecast. Core inflation year over year will be down according to forecast, but month over month, same thing, seeing it there, and the year over year, same thing. So this could give us a little rally. This is your hopium for the week right here, is our inflation data, because all of it is expected to come in lower. If we have some beating expectations, would be very bullish for the markets. If this comes in and it's higher than 0.4 or higher than 3.3, then we will likely see a massive fear sell-off on top of an already started sell-off, and that will just cascade into people's stop losses and shorts and everything else being triggered, or not shorts, their stop losses and their exits from their spot buyers and stuff, saying, hey, if it hits this level, let's get out. So tomorrow, Wednesday, guys, is going to be the day to watch all that inflation data coming in there. Thursday, we're going to get PPI. This is your producer price index. It's expected to be down too. So guys, if in the world of the markets, this is where the type of stuff that we're going to want to see, this turnaround of the economic events, because really what's led us to here, it's not the composite, man. It is not manipulation. It is not the institutions trying to sell everything off so that they can buy it cheaper. They're just taking advantage of what's already happening from the macro economy, and this economy is what is playing all the cards right now. Shout out to Alex O Crypto in the chat, Mr. 10K in the house with us. Good to see you here, bro. Friday, we're going to get that Michigan consumer sentiment, and it's looking like it's actually going to be a little bit better too. So we are projected as of right now to get better data this week that could give us some support for a bounce. But where is that going to happen at, and how long will it last? That is going to be the question. We'll look at those charts in just a second. This one here, this is a memo that came out. This is on CNBC Pro, and they're talking about mass layoffs at the Veterans Affairs will begin as early as June. And this is just one slice of the pie, one perspective of what is going on right now in the federal government. This could happen as early as June. The memo, which is dated March 6th, directs the Department of Human Resources team to begin reviewing the agency's operations with an eye toward firing civil servants. It said it expects the review to be done by June, after which VA will initiate department-wide RIF actions, meaning reduction in force. In a response to a request for comment, the VA sent Reuters a link to the VA Secretary Doug Collins' recent opinion piece in The Hill, in which he defended the cuts as a thorough and thoughtful plan. So, they're talking about seeking to cut 80,000 people just in the single agency. So those numbers, I'm going to show you guys something here. Actually, let's jump over to here. Let's go to News Cam with OC. And I just want to show you guys what all of this job cuts for the federal government look like. Let's go in here. Always allow. There we go. Fred is now dark for you people, that so you're not blinded. And let's go look at government jobs. And this is Fred. This is a Federal Reserve economic data site. And so job openings for government. I want to show you what's going on here. It started here to pull back here, but you can see what is really keeping the market to float, because everything else is way just like angled down. The only thing that's keeping the market to float on the job numbers is going to be the hires, government. There we go. This is going to be what's keeping the job numbers afloat, is the government jobs versus the private jobs. So when all of those jobs start to play out and start to come out of the numbers, we could see some serious pullback. Where does that take place at? Right now, they're expecting June is when we'll start to see the impact of these job numbers start to occur. If we have job numbers start to take effect in June, guys, that was where we were at before when we had our 2021 bounce. So we had the 2021 top early in Q1, pulled back 55%. Summertime, June, July, we started to get our bounce, and then it went up for a November high in 2021. So even if we do get the data this week that gives us a little bit of support, if we're mirroring anything like 2021, the point that we should be bouncing up to come back and retest, 108, 109 ranges, could be a time that we're getting the worst jobs data, and it's really freaking everyone out. Of course, big, massive cut in job data means weakening labor market, and that will force the FOMC, the Federal Reserve, I should say, to go ahead and cut rates. That would be bullish for the market because it would be indicative of quantitative easing. Right now, we're still in quantitative tightening. So it would really come down to that point. If these job numbers are weakening, how is the inflation looking? And if inflation is not looking very weak, then they will choose to protect the inflation numbers by not cutting rates versus the job numbers, because it's much easier to later on pump money into the markets and get these companies to rehire people than it is to get inflation under control. And so, like I said, rock and a hard place for the Federal Reserve between inflation numbers, inflation data, and labor market data. And it looks like labor market data is probably on a glide path to get worse. Inflation, hopefully we get some good data this week and we can find some support. Right now, we are sinking a little bit lower. We're below $80,000 right now. So let's go ahead and jump over to the chart and see, get ready, and we'll see what you're thinking about the current markets right now. I just want to show a couple of things to the people. So let's jump over there and let's check this out. Over to the charts. Guys, right now we have this level that I talked about. This is this $80,011.41. We talked about this 2 weeks ago. I know it's the very exact number. Where does it come from? It comes from this. Let's go find it here. Come here, you. Where are you at, Titan of Crypto, talking about your 382 pullbacks? This is what he was talking about here. 38.2% pullbacks. When we have tested these levels, on pullbacks, and you can see going all the way back in the cycles back over here, we had a 38.2% retest. It did not break it and close below it there on the monthly. Check. That was good. And then when we no longer got a good bounce off of it and held it on the monthly close, then we were in the start of a bear market. Same as in 2021, broke that 38.2. That 38.2 right now in the current level that we're looking at is coming in at $80,011.41. we are now losing that. We have lost it already once, but it pulled right back in on the next daily, next 4 hour actually. So we're going to have to keep an eye on this. We do have the whole month still for March, so about 20 days that we can keep an eye on this level. But that $80,011.41, just go over, click that little plus button, add that line on there. It's 80,011.41. Put that on your chart. That's the thing to watch, in my opinion, right now. We did get a break here below this orange line. This is the 200-day simple moving average. And now, because it's on a daily and I'm on a 4-hour chart, so it's not completely over. But if you just, project that line over, you can see that what we have done right there is the OC retest there. There we go. OC retest and rejection for more downside, and that is not a very good look right now that I'm seeing on Bitcoin, guys. I'm going to be watching the level down here. And if we look at this level, it's going to be my green box here. It's Bitcoin's last stand. It's this little volume node that we have here from the fixed range volume profile area. And then once we lose that, it goes all the way down to the point of control. Point of control right now coming in at 67,000. Of course, if we come down and we hit this level here, a couple of things to watch here. One is going to be the red line. That is your 300-day simple moving average. And you can see how important this level is on retest. We broke it a couple times here, but we had nice little retest there. We had a nice little retest there. Go back into more history here, and you'll see that 300-day simple moving average, when you lose to 200, is your must-hold level. So that's going to be coming in right here in Bitcoin's last stand level, which is that volume node. And then to top it off in that zone also, we have this BTC1. Where art thou, BTC1? Yeah, BTC1 right there. This is going to be the level to watch here, and this is going to be your CME gap, which was made back here in November 2024, and the CME gap comes all the way in down here to 77,385. Of course, on CME, which does not trade after hours and on weekends, these are futures. The 200-day is coming in right at the bottom right now of that CME gap, and that level is coming in at 77,300. So inside of the Bitcoin's last stand, that goes down as low as 74,000. So that would close our CME gap and also give us a 300-day simple moving average bounce. OC, let's kick it over to you, see what you're looking at. But these are the levels that I'm watching right now, guys. Really is $80,011, and then 77,190 is going to be the first level to keep your eyes on. OC, over to you. Let's see what you got, bro.
So just took a look at a couple of altcoins, but let's get started to Bitcoin here. I was looking at a possible double bottom here area. Remember that in the macro scheme of things, we are looking for a huge trend line. Here we go, that we are just not able to be broken, right? So to be breaking at this point, let me just get rid of a couple of things in here. Remember that we have this trend line here, and we were talking about this breakout. Also, when we were right here at the dynamic reactor, remember that there was the secondary chance that if we go or if we start breaking through dynamic reactor and we close above the dynamic reactor, the next step will be a breakout retest, and then we were expecting something around 98,800. We had a hard rejection out of the dynamic reactor here, going for the next area of support. We failed that area of support, and finally we are going for that possible double bottom, right? Very important, and let me just get this right back at where it was. There we go. Let's go to the 4-hour here, and let's just see what's going on that breakout. On that breakout, well, it seems like we made 3 bounces in here. We bounced twice out of that dynamic reactor. Remember that we were expecting and watching on this symmetrical triangle. That symmetrical triangle, remember, that had 50% chances to break in out either way. And seems like because we were dipping below the zero line, there we go, that was the definitive area to be broken or breaking. Remember that we are expecting a flip of the ribbon. There we go. And that flip of the ribbon, I think it could be somewhere around right now. All right, before we start looking for areas of entry. I'm not telling you guys to enter on flip of the ribbon, because we need to find first support, the flip of the ribbon, and confirmation. Also, remember that we could be doing something like this, like a double bottoming here, right? Like a double bottoming here, which means that we could be dipping farther down. If I start dropping in here my indicators, you'll see that we have a high order block here. It's not a loud order block like it was at the top. That's why we started to rejecting from that, right? It is still a high order block, but not a loud order block, which indicates to me that most likely we could be seeing a big rejection out of this area, especially because we are 87% bullish. Remember that order blocks are based on order allocations, and depending on where people start allocating their money, well, then we're going to be seeing this order block going to high or too loud, right? Or from high to low. So be careful. Start watching those order blocks, because when they are dynamic, they are live, and they can be changing from 1 hour to another. If we're talking about the 4 hours or something like that, if we're talking about lower time frames, it could be changing much faster. But so far, we are grabbing liquidity out of this order block, and we could be having maybe a bounce out of this area. But as Piper mentioned to me, because we were discussing this and I want to bring this up, Piper mentioned, hey, OC, what do you think that we're going to be bouncing out of this area and not closing the CME gap? And he is right. I mean, there is a big chance that we could also be going lower to these areas right down here. And to start looking for those areas, there we go. We're going to be turning on our indicator from chart prime, which is the predictive ranges. So the next step, if we don't hold at 78 or 79K, well, then I think the next area, including a little bit of overshoot, will be somewhere around 74. So be cautious here. If you want to buy the dip without knowing that it's a dip, remember to use a very tight stop loss somewhere around these areas, and also manage your both risk and leverage. All right, so be careful out there. Turning it back to you, Piper.
Yeah, some things that I'm watching. I mean, because we've got some. Look here. Let me explain how the Federal Reserve has to look at job numbers and inflation. Okay, because that's their two enemies, right? Weakening labor market and rising inflation is the two enemies of the Federal Reserve, and so if the inflation is going up, then they raise rates, right? And that will cause people to, it tightens up the money. It means that people can buy less, which means it lowers demand, which then allows supply to catch up and inflation comes down. That's the basic nuts and bolts of inflation, okay? And the Federal Reserve's rate hikes. If jobs are starting to be cut, jobs are being lost, labor market weakening, then the Federal Reserve just acting on that stuff will cut rates, right? And so you've got what raises rates, what cut rates, and what makes them stay static is job numbers weakening and inflation still rising, right? This week, we're looking at a situation where, let's jump over here. I'll show you this stuff. This data. This is from FX Evolution. I follow this guy on YouTube. I found amazing resources on Substack just by following this guy. So, but he did record job cuts in February is what he said. Employers slashed 172,000 jobs last month, the highest February total ever, and the worst month since July of 2020. You guys may remember that. That was COVID-19. By sector, let's go show more. There we go. By sector, biggest job cuts by sector: government 62,000, retail 38.9, tech 14.5. Doge-related firms are behind 30% of all job cut announcements this year. Yes, you read that right. Markets are watching closely. And if you go down here, you'll see Doge actions for February, 63,583. Market economic conditions was 28,000. Bankruptcies, we're seeing bankruptcies through the roof right now. Restructuring, meaning, hey, we're going to, Google just did this, I believe it was Google. They said, hey, we're going to cut all these jobs and we're going to AI in this sector. So that is part of restructuring there. Closing down of businesses, no reason provided. Cost cutting, demand downturn, 2,300. So a lot of numbers there, 172,000 total, okay? So what we are seeing, by the way, natural disaster, only 150. And that's all those fires, all the hurricanes, all that stuff. So, so as of right now, we're looking at job numbers really bad this week. So based on this, just this data right here, this would mean that the Fed Reserve could be poised to cut rates, right? Because they're seeing weakening of the labor market based on what I just told you. But if we get this inflation data comes in this week, and this starts to show, hey, inflation's coming down, it's coming back into control a little bit, well, then that would be another reason for them to cut rates. So we have double things stacking up for possible rate cuts. But again, I want to reemphasize, we're only looking at a 97% chance right now of a rate cut coming in March. I don't think we're going to see anything happen on that front until May. And that's where we start to get into 42% chance of rate cuts. Okay. As of right now, no change is the status quo for the Federal Reserve. So we do have a little bit of alignment here. The stars are aligning economically for us to start to see a turnaround. But if there's again, inflation numbers come out higher than what's on the forecast this week. That's why everything's on this week, guys. So tune in right here. We go over the stuff. We break down the data, and I try to explain it to you guys. Break it down Barney style. That's what I always say. Bringing that lingo from the Army. Let's break it down Barney style so that you guys can get a better understanding of what this means. This is the data that I've been watching for months, talking about all of the, why I thought that we were going to have a bad quarter one. And that is why I sold at 102.7, all based on this economic data. So we'll be breaking this stuff down for you guys every single day this week as it comes out. If you guys are new here, smash the like button and hit the subscribe, hit the notification bell. You guys will tune in and get notified when we're live every morning here for the Morning Market Report. OC, let's go take a look at altcoins and let's see how those are looking right now, because with Bitcoin doing this pullback, alts are very likely to continue on the path of wreckage. So what do you got for us on the alt side, bro?
Oh man, Ethereum. I don't know. Let's take a look at what we got in here. This is gonna be Ethereum for me. Well, this is the face that I do for when I take a look at Ethereum. But at this point, we have not lost any important or major areas in here. Let's just get back in normal mode. But we are. Yeah. Oh man, Ethereum, man, Ethereum. It's just a golden chip in here for me. All right, so we've been looking at Ethereum here. I haven't lost any major support. We're still within the range. This is showing the strength of Ethereum. I'm not gonna lie. I mean, when Ethereum is doing it, it's doing it, right? But we are not out of the woods in here. I mean, we are in a downtrend here, and we have a flat bottom. Or at least that is what it seems to be. Remember, triangles with a flat bottom, we usually break to where that flat is at. When we're seeing maybe a triangle, let me just show you an example right here. When we have the flatness at the top, we usually break to the upside. But in this case, since it's at the bottom, well, it's indicating that we might not have, or we may not be as lucky as we are expecting. Still, as long as we don't lose the 1,890, I think we could have a sweep of the lows in here, maybe going back up. If we do this and we break back to this area, that's what I start thinking about entering for a trade. And I'm going to be trying to enter the breakout retest when we do a break above the zero line in here and we hold it, like for example, break above and hold it somewhere above that zero line, something like this more exactly. Basically that way I'll try to jump in at this area. Let me just make it very good, perfect, something like that. Make it so I'm regaining or reclaiming these areas at 2000 ish areas. So far Ethereum holding in there, while Bitcoin kind of like you know what, it's look at that, not looking that great, but still remember we're jumping into that, or we're diving into that area of support. Litecoin, I was looking at Litecoin for a long time here, and we had a breakout retest here, something that I could be expecting out of Ethereum. Remember that when we're looking for something like that, that was the base. In fact, we were looking at that little wrench in there, not only because we had previous support here, but also because we had a consolidation score higher, and also because we have these other areas of support at that same zone. Look at how those go all the way down here where we are exactly right now. So if Bitcoin is able to bounce from where is it right now, I believe that Litecoin will do also. But so far, look at that, a bullish divergence, flip of the ribbon, some support being taken, but the show is not over. We need to look for that major zone of support. And to do so, we can start throwing in a couple of our indicators. And I want to show you, there we go, that we have daily support all the way down here with the previous weekly low. So yeah, despite we have a predictive range here, we are losing a major area of support right up there, and we had the breakout, retest, and off we go to the next area of support at 82, 83-ish area. And finally, before I throw it back to you, OM, we lost the dynamic reactor for a long time. Look at that. OM was very strong, but so far we have lost the dynamic reactor. We're still respecting this trend line, and I was expecting a V-shaped recovery before a movement to the downside. I don't see that V-shaped recovery, but I do see a couple of bullish divergences. Many altcoins are having this bullish divergence, but be aware that we're printing sell signals, basically confirming a major trend. This means that we could have, let me show it to you, maybe we could have a fake out, there we go, something like that, that comes down to the dynamic reactor, right, for a confirmation of a breakout continuation to the downside. So something like this. All right, so far OM now turning bearish, although the bullish divergence could signify that we could go find the dynamic reactor. Is this a good area of entry? I don't know now, because yes, we had an alert at 592, but Bitcoin, it's still dipping. So other than that, let me throw it back to you, Piper, and maybe up next I will have Ada and Soul prepared.
Awesome. So yeah, I'm taking a look at Sol right now, actually. I'm looking at this fixed range volume profile. This fixed range volume profile pulls all the way back to September 2023 on us here, guys, and we're looking at it daily. And I just want to show you guys here. I'm going to turn off a couple of things here just so I can isolate the moving averages here with the fixed range volume profile. So we had this value area high coming in off of here. This is going to be your upper 70% of the fixed range volume profile range here. And you can see we had this double rejection. Yes, we did have wicks above it here. But if you look, we really didn't have any candle closes above it. We had one slightly, and then it immediately pulled right back underneath. That was your level of rejection coming in at 260. Okay. And then when we take a look at this coming down, what happens is we had 200-day simple moving average here, 50-day simple moving average, 300-day simple moving average. All of these levels have been at some point in the recent history for the past year, past 12 months, a point of support. We tried to hold it here, and you can see it did a nice little retest there on it, pulled down. What we get here? A nice little liquidity sweep to grab the liquidity sitting there from that last one, because people thought that we're good to short. We lost the 300. It came up, did a liquidity sweep, probably grabbed a lot of people's shorts there and closed them out, and then it continued on the downside move. Right now, we are losing the point of control, which is coming in at 143.75. We lost that last week. I am watching this level here. This is going to be $97.19. If we go and we throw on the fibs right here above that, we have our golden pocket, and the golden pocket back here was previous support back in August of 2024. A lot of levels here on the 618 here, giving it also there before it was resistance, right? I'm watching this area. I think we're going to pay a visit down to this $100 range on Solana before we get anything. You can see right now we've lost this volume node. That is the current price right here. We're down here almost at that golden pocket. That would put us down into this range. And I think when you look at the value area low with the 0.66, this is a GAN level on top of fibs. That's why I like to use the 0.66 instead of the 0.65, because a lot of times that 0.66 plays out more accurate because people know that the 0.65 is the golden pocket bottom. So what do? They set their stop losses just past it, and that typically sends liquidity sweeps to the 0.66 level, and that is why I use that level. It is a GAN level, not a fib level, but when you look at my golden pocket, it is the 0.618 to the 0.66 66% line, and I do think we're going to pay a visit down there. So let's go ahead and throw on a rectangle box here. And we're going to line it up here with the value area low and into that 0.66 range. And let's just put it right there, and let's make it green, because that is going to be the area of support that I really think we need to catch. If we don't hit that, you guys see there's a big gap again going down through here. nice little volume gap. There's no low volume gap there, and we come into our first point here, which is right above the 786 at $70.23. So looking at the oscillators right now, actually, let's go over here to our daily chart and let's look at the multi-oscillator scene set up on Solana and see how it's looking here on the daily. There we go. Losing that level and normalized. We are just now starting on the daily to get a red histogram. And this means that likely more downside coming. You see these don't really turn around very quick on the daily. Once they go red, we get downside moves. So right now we have our first red histogram block here on the MACD normalized. This is a normal MACD, but it's got some extra features in it. This is a free indicator from Chart Prime. Just go in and type in MACD normalized, and you will find that from Chart Prime. We are starting to cross and get a bearish signal cross here, which means all of this time that we did all of this with lower lows, or besides that liquidity sweep, we were just in a bullish pattern here still. We had a bullish histogram. We had a bullish signal line. Now we are crossing over into the bearish zone, which makes me think we still have quite a bit downside to go on Solana. Solana, I would say, is a short right now. Absolutely. Money flow is starting to curve down. Volume is dropping, and you can see we can go way lower here on the RSI Prime. This is an RSI turned into candlesticks. And if you take a look at what you would have been able to do with this one, again, a free indicator from Chart Prime, when they were in the red here and it was going flat, that was this whole range here. You could have just followed the RSI, just follow the RSI. Got blue down here. Look, that's that area right there. Write it up, see the liquidity sweep, take your profit, get out of Dodge, and down it goes when you lose the 300 simple moving average. Matter of fact, if we go in here on a lower time frame, I bet you there's a retest on that 300. Yes, there is. It broke it, and let's go in and see. Yeah, you can see there. It tried to pump up right there and get above it again. Couldn't do it, and that's it. OC retest number one, and that's where you would have entered the short there on Solana. So, guys, a lot of great power in these free indicators here that we're using. This top one here, more MACD normalized in the RSI. That's what I'll be watching on Solana. More downside. Matter of fact, if you get a good retest here coming in off of the bottom of this point of control. Like if we get a bounce down here in the gold and it comes up to this point of control, I would actually be looking at setting up a short right there. OC, let's kick it over to you and see what you got for us, bro. You're muted.
Thank you for that. So sorry, I was just MJ called me just checking out if I was awake because I did not answer her messages. So yeah, basically talking about ADA.
Oh, hold on before you go into ADA. I got to give a big shout out. I am honored. Tom Crown. Shout out to you, bro. Welcome to the stream. It is a pleasure to have you here, man. Now back to the normally scheduled ADA TA here. Let's go, OC.
Absolutely. We were expecting a bounce out of the dynamic reactor here. We first went for the first impact that we were expecting here, but did not hold. We went for the next one. We had a nice bounce in here, but we also were looking at the area of 0.76. By the way, guys, remember that this entry was not taken. Why? Because it was canceled as soon as we broke below this area and lost their supporting here. So it's time for me just to get rid of this entry and then looking for what we got at this point. Let's start with a big trend line here that we have been respecting. In fact, let me just adjust it a little bit more here, something like this. There we go, much better. And we're looking at this point of an area of support somewhere where we were in here, and we had a one of our best area of entry, which is our where is it? Here we go. Our liquidity zones. Just in case you're looking for them, Market Dynamics Pro liquidity zones. I love to enter in those areas, but at this point, we're going back down. Yes, we're still green because we haven't taken the previous low in here, but be careful because we did lost the oscillator here. We lost the zero line and we are still below. If you're looking to short it, or wait for, again, the next pullback to the upside and also a rejection of the zero line in here. If you're looking to long it, well, then wait for this area of big support and then a flip of the ribbon to the upside. So I will be expecting a long possible entry as we do something like this, a little bit more quiet movement on the oscillator going to the area of support at somewhere around 57, 58 or 0.57, 58 ish. And if we are not able to hold at that point, well, then I will say that we have a big gap to fill, which is going all the way down to 0.41 or 0.32. So guys, be careful. I'm gonna be trying to long ADA somewhere around this area of support first, and I'll be looking for my confirmation on the way back up, not on the way down, but on the way back up. Why? Because look at that right here. We have a secondary area of entry with previous monthly low, daily support, and also an there we go, liquidity zone, which seems to be very strong. So two liquidity zones. One might stop the main volume, and the second one will create a big and nice wick like we see right down here. So be careful, Nada. I already set my alert, and I'm gonna be setting it right here with you guys. Let's just call it at 59 for the first area of entry. And again, this is not a blind entry. I need to see my flip of the ribbon, and remember, it's gonna be after the bounce has happened on the way up. That's where I'm gonna be trying to jump back in. In fact, let's do it like that. That's what I got on ADA. Other than that, I want to visit BNB, because BNB has not been playing out as we expected in this entry of a long. If we were just about a little bit, yeah, we were just a little bit above water, and then it took us out. So that was not a good trade for us. But still, that's what happened. Let me just get rid of this. All right, let's unlock this. Perfect. And now at this point, we are into a falling wedge. Usually falling wedge breaks to the upside, but I won't be betting on that just now. Why? Because we still need to reclaim another huge movement like that before we have a breakout, then maybe a retest, and off we go. But so far on how things are looking, not there yet, right? This is looking very close to ADA. And why is that? Because look at our areas of entries, which are all the way here, our first daily support. We have also the bottom of the falling wedge, and then we have two areas of support. Well, area of support, previous month low, and area of support right here with this liquidity zone. What does that mean? It means that first I'm going to be looking for maybe a bounce of this area, maybe bouncing out of the predictive range, going for a sweep of the lows, and we need to look at this point what's happening on our oscillator. If we're breaking above the zero line, most likely we are going to be entering for a long position, reclaiming the falling wedge. And this is when we start, let me just get rid of this because this is confusing. There we go. When we start breaking above the zero line, most likely we're going to be aiming now for reaching the top of this falling wedge with a possibility to be breaking above it. But we are not there yet. Let's trade this step by step. But that's what I got on altcoins. Guys, if you want me to take a look at anything, please let me know in the side chat. I'll be more than happy to add it to the list and take a look at it.
Awesome. We had a request to do XRP. I'm going to pull it up now. Shout out to FD White joining us over here too. What's up, bro? He said bear. Yeah, Piper Bear is back in the house, man. Gotta call it like it is. Gotta keep it real. No opium for sale here. Only real data. So let's go check out what I'm seeing on XRP right now, guys. We did get a retest and rejection here on that 618 golden pocket that I had pulled here for a while. This goes quite a ways back, just so you know. What I'm watching here right now with this rejection is this support zone that's coming in right about $1.82 on XRP. It's going to be this previous zone here. There's a nice little volume node, had a support bounce there, almost hit it there, a little front running on that price action. But I'm watching for us to come down to this level again. If XRP can get here and hold, if the bullish buyers, the buying pressure can suppress the sell-off that is going on, and Bitcoin can, maybe hold a little bit of price structure on the positive side, then we could be looking at this being our good entry zone here. We could set that right below that 50, but I do want to advise you that the 200-day simple moving average is going to be coming in, and I do think at some point this is going to want to retest this 200-day. Currently, right now, it's about 161. I think what we might actually see happen here is where the price comes into the support zone, does a bounce, and then does a double rejection here on that 618 before heading down. And by then, guess where this might be? Sitting right here in the 50% fib zone in that support box there. So that's what I'm watching for XRP. As of right now, we are seeing that the downside selling pressure, the power bar is waning, which means that this could be a little reversal. You can see here it waned on that power bar, turned into that little peach color there, got the uptrend arrow, got the bullish divergence, and that was the bottom there before it pumped up for this liquidity sweep. So what I would be watching for now is we have this. We want to see money flow go back into yellow. See how right there, the money flow went yellow. Right now, it is in the red, and that means it is a selling. So we want to see this get back into positive money flow. And then get another divergence. So if we can get down here, this stays above, and we get a continuation for another divergence right after the True 7 clipping, which is 7 different indicators giving you bullishness or bearishness. Right now, we just had all 7 fires bearish on top of the power bar and on top of, what we're seeing here, money flow and all that. So if this can give us another divergence right after that True 7, money flow starts to come up and we're in this range, I would feel very strong about a long here and just set your stop loss down there. But keep in mind, we at some point will come back to visit. So this would be a scalp trade. We would come back to visit that 200-day. This node right here that you're seeing here, guys, is coming in on the 382. And so, of course, if we break that 200, that would be our next level of support, which is going to be coming in at $1.41. That's what I'm seeing on XRP. OC, we've got about 8 minutes. I'm going to let you take another altcoin, and I'll take one more altcoin, so let's make it quick. But we're going to be going over to check out on a redirect, Trading Wars with Crypto Keeper. We got the real crypto face over there, Evan Aldo, Blockchain Crusader, Tradefly, our very own Tradefly is over there, Crypto Blood, Jenna X, my wingman, and the Bullish Trader all over there competing in a trade competition starting right after the show. So we're going to be redirecting over there. So let's get into these 2 more alts, and let's see what they look like.
Absolutely. So other than altcoin, I want to take a look at gold, because gold has been playing out fairly well. But we are kind of like a make or break point here. Remember, at this point, I know it's a little bit spaghetti-ish, but we were expecting a double top formation with almost either an equal top or a higher topping here before we have a pullback or a major pullback on the daily. Right now, we have fallen below on this rising wedge. So we break out, look at that, breakout retest, going for that dynamic reactor. We lost dynamic reactor. We claim it back, right, with a sell signal. This is important. Why? Because we could be making a dead cat bounce. We are almost losing the zero lining here, and that will be important. But at the same time, for me, it seems like we're making a little bit of a bullish pennant or bullish flagging here. So how are we going to be trading this? We need to wait for confirmation. What needs to be our confirmation? Well, holding the dynamic reactor at somewhere around 2,889-ish, right? And then seeing a flip of the ribbon. If that is the case, most likely we're going to be taking the next target, which could be, there we go, back at previous highs for the double top formation that we were talking about, right? So this is a make or break. Be careful of these areas. I would not be buying any gold at this point until I see that flip of the ribbon. If we lose this area right here, most likely we're going to have a lower low at our next area of importance, which is right here with this predictive range at 2,889. Let's just visit daily very quick. There we go. Because we were talking about a possible setup where we reach the dynamic reactor. Let's just wait for it to load. And also let's get rid of a couple of indicators in here so we have a cleaner view. There we go. And what we're talking about here is that losing that area right there. Remember that we can get to the next area of importance, somewhere around 2,812-ish areas, right? Where we could then be claiming back a bottom. Still, we're far away from dynamic reactor, and we could be going to visit like we did right here. If that is the case, we're going to be drawing again another triangular pattern analysis in here that will get us, as always, this area of this base area into possible breakouts, targets to breakout, retest, and off you go to the upside, or breakout, retest, and go to the downside. But still, we are forming that pattern. So other than that, that's what I got for gold. Piper, let me throw it back to you.
Awesome. I just want to take a look here at Bitcoin. So I'm looking at, before we go, I want to break this down for you guys real fast, just to let you know what one thing I am watching on these charts for Bitcoin. And this is the Pi cycle indicator, guys. When we lose this lower moving average, the red line that you see on here, we typically have downside moves. And we talked about this when we were touching it back here mid-February. I was like, look, if we lose this, we're looking for downside moves. Is there a link where I can watch the trade wars? Yeah, we're going to redirect, Freezy. As soon as we get done here, just stay tuned in. We're going to redirect right to their channel here in just a minute. So hang tight, Freezy. So if we take a look here at where we broke here on this lower moving average of the Pi cycle, back in 2021, this is after quarter one when we had the first pullback. That was a 44.9% pullback from the time that we lost the moving average to the bottom, okay? We had it here after the November peak when we broke all-time high. We broke that level. That was a 38.5% move to the downside. We did get a nice little break up here, came back in, still lower low, but even from that one, that was another 62. So combine those together, guys, it's going to be pretty hefty. Let's go see how much that was. Let's go see all the way down there. That would have been a 71% move in total from the time that we lost it. Now, if we are in the bull cycle, okay, and we're not repeating what we saw in 2021 here, and this is still a bull cycle, what does it look like when we break this moving average on a bull cycle? It's 7.5%, 12.8%, 25.25%, like we saw back here after the March peak when we broke the first all-time high, okay? Right now, we're at 17.33%. So even if we look at this average, we're above, 33% of our bull trend breaks here, right? And we're lower than the 25.25%. So if we go and we go, okay, let's see, where would this be at? 25% pullbacks. That's a normal thing in a bull cycle. That would still put Bitcoin right now down at about $72,000, closing that CME gap. If this is something more like what we saw in 2021, a 44% pullback, that would be putting Bitcoin all the way down to about $53,000. I know that number sounds insane, guys, but that is not outside of the norm of what we see in bull cycles. So I just want you guys to be aware of some of these levels. When you lose this moving average on the daily, this is actually a 5-day chart. When you lose this Pi cycle moving average, you can get some pretty low drops coming in, guys. So I don't know that the pain's completely done yet. My one piece of hopium that I will leave you guys with is going to be on my X here. Let's go to X and let's take a look at that, because there is one piece of hopium that I want to leave you guys with before we head over to Trade Wars. Let's go to the news cam. Let's bring OC up here with me. Come on up, OC. There we go. Okay. The one piece of hopium that I have here is coming in from Evan. Yes, Evan from Stock Market News. He said, White House economic advisor Kevin Hassett just said on CNBC, be wary of recession talks. Expect first quarter to squeak into positive categories. It is possible. Like I was talking about the economic data with the labor market and the inflation, if they align, the Fed Reserve could start to cut rates, and that could push bullishness back in amid the recession talks. It doesn't mean recession's off the table. It just means not yet. And I want you guys to be careful, because that positive category could just be, again, on a higher time frame, another liquidity grab, but it might give you guys an opportunity to take some profits off the tables if you feel so inclined and you feel like you missed that on the first one. Crux was actually talking about that on X this morning. Let me find his post here. good old Crux of Crypto, my boy. He made a comment on X about if you missed out on all of this, and maybe I don't have it in here no more, but he basically said, look, if you missed out on it, at this point, it's DCA is the way, right? And that's why in our Discord, we talk about the DCA Piper plan pretty heavy. There it is. I found it. There it is. He said, worried about round tripping if 108, which 109 was the peak, 4-year cycles broke. At this point, DCA strong conviction plays and hodl for years. Do not expect the same 70% pullback if we didn't get the same bull market growth. And he's very right. He's very correct there, because if you get these very super strong rallies, that's where you get these big pullbacks on Bitcoin. And if we didn't get the parabolic rally, there may not be enough there to really pull us down to our typical 70%. Might be more like a 50%. So that is what that's what I'm going to be watching there, guys. I hope you guys got something out of today's show. We're about to head over right now to the trade wars. So just stay tuned. Don't go anywhere. We're going to redirect you guys right in there. Go check out TradeFly and a bunch of my other friends that are over there in that trade competition. But TradeFly, Piper Academy's very own winner of last season, or 2 seasons ago. He was the first place winner. OC right there was the second place winner. So they're over there doing it. So Discord link is down below in the description. And then also, I'm sure Alexander G is about to drop the link here in the chat. But guys, let's head out of here. If you haven't done so yet, smash that like button on the way out and share it with a friend. Sharing is caring. We're trying to get to 10,000 also. I'm just trying to be like Alex O Crypto and the gang. OC, I'm glad to be back with you, man. We're going to head out right now. Take care, guys. Trade safe. And as always, use some risk management. Watch that stuff we talked about today, and we'll catch you back here tomorrow morning at 10 a.m. Eastern Standard Time with news, charts, economy, and everything you need to have knowledge, because knowledge is profit. Later, guys.
I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after wheels fall off. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul train ready. What a line from OCI, from a Mexican spaghetti. Yo, Crux Crypto with a deep dive to reject dime. And if you like the visual powered by Chart Prime, then you were part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after wheels fall off. Sound off.
To get rhythm, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my alumni, you know what I mean.
That was awesome, dude.